Hello and welcome to this Tuesday's morning market briefing. We've got a lot to talk about, but firstly, Apple has been fined, is to be fined 1.8 billion euros for breaking EU law over music streaming, as well as that US Supreme Court rules that Donald Trump will remain on the Colorado ballot. We've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is on the topic of Apple. Now, Apple has now been fined over 1.8 billion euros by the EU over anti-competition allegations. Now, this marks the first time that Apple has actually been punished for breaching EU law. Now, we have discussed Apple as a stock and a kind of, a company which is very important to kind of keep your eyes on many times. That is largely because of, its presence within the tech industry. It's a tech giant, and, it often does actually kind of become the victim to many of these allegations and also kind of attacks by certain administrations or commissions of these governments and blocks, as we are seeing now with the EU attacking Apple. But we've also seen it before with the US government, also the Biden administration, attacking Google, as well as Apple, I think, as well. So this is certainly not the first time we've been seeing these allegations being thrown out. With, not too long ago, in fact, we were talking about how Apple was getting scrutinized basically for its iOS ecosystem and the way their Apple Store basically takes a large percentage of sales from developers and was also preventing developers from using outside platforms to host their apps. And this way, Apple was forcing those developers to remain within the Apple ecosystem and preventing that competition, really. So Apple never had to kind of change the percentage of sales they were taking from these developers, and therefore costing these developers far more than in a free market where maybe they would be able to put their products on another platform and therefore force Apple to bring down that percentage of sales taken. So that's something that I think is very important to kind of note, is that this is certainly not the first time we've been hearing about this. And as we'll get into, this kind of allegation, this investigation which led to this fine, has been a very long investigation lasting many years, and now it's culminated in such a extraordinarily large fine, which only however makes up a very small percentage of Apple's turnover. That doesn't mean, however, that this won't affect Apple's stock, of course, which makes it incredibly important to talk about. But also, it's important to kind of understand, not least just for Apple, but understanding the wider tech industry. We know we've had, as I've spoken about earlier, with certain administrations, certain governments, such as the Biden administration within the US, which has clearly stated, its aims and its goals to really crack down on big tech and deal with the issues of monopolization and anti-competition kind of actions, which is currently going on within that growing industry. As we do often see in those growing industries, there is that kind of lack of regulation which worries some people, and therefore, we often do see these governments start to crack down on, certain policies or certain companies, and that is seemingly what is happening across the world, actually within the developed world at least, and that is why we're now seeing the EU obviously handing out this massive fine, and I'm sure we're likely to see something similar from maybe the Biden administration as well, as we were just talking about basically the fact that the Biden administration was really cracking down on Google as well, in regards to the way it was kind of implementing certain Google applications on certain other products and that kind of thing. So, very important article to talk about. Now, according to the EU's competition chief, Apple has restricted developers from informing consumers about cheaper music services outside the Apple ecosystem, with this leading to accusations against Apple for abusing monopoly power. Apple has since responded to the allegations, promising to appeal the decision, which presents the prospect of years of new legal fights within EU courts. And that's what always kind of comes with these large fines and decisions. Is then we have years of this investigation which has led up to this massive fine. This is kind of sensationalized, and then we see maybe even a year or so, or more than a year of then appeals which will go on around the investigation, around the fine, and then we'll finally see the result maybe a few years down the line. But that's something to always take into account. The time and what may follow something like this. It isn't a guaranteed, okay, this is 1.8 billion, they're going to have to pay it. We do have those kind of appeals which can take place, and that will kind of affect Apple stock, because it will kind of it will prevent Apple stock from taking a large hit from something like this, and maybe kind of smooth things out for it a bit. So keep that on your mind as well. Now, since the news, so back onto the topic of Apple stock, since the news hit markets, Apple was down 2.5% following the morning's trading. Now, the usual fine for such an act would have been around 40 million euros, but the EU saw this as too small for such a large corporation and therefore increased the ticket to 1.84 billion euros. The Commission also reportedly raised the amount of the fine after discovering that Apple had submitted incorrect information during the investigation process. So it does seem like the EU Commission here had that basic fine and were basically looking to make an example out of this to kind of prove to other big tech firms that the EU Commission would be hard on any of those big tech firms that wanted to monopolize, that wanted to mess with industry. So that is the key thing that we can take away from this fine, most definitely. Now, this fine now marks the third largest antitrust fine that the Commission has handed out, with Google also having been fined $8 billion over a decade for breaking antitrust laws. So that's what we were also talking about just a moment ago. Now, the investigation into Apple began in 2019 following Spotify launching a complaint against Apple for using anti-competitive methods to stamp out competition, with the investigation concluding that Apple's actions resulted in higher prices for music services. Now, the ruling also now prevents Apple from blocking apps outside of their Apple ecosystem. That's what we were talking about just a moment ago, about allowing allowing developers to list their products on other services other than Apple's primary app store. That's all to talk about in this article, though. Very important in regards to tech, but also in regards to just learning about Apple stock and news around Apple, basically. That's all to talk about in this article, though. Once again, next article to talk about is actually a political one around Donald Trump and the Supreme Court. Now, this is certainly not the first time we've spoken about the Supreme Court nor Donald Trump, and certainly not the US primaries. And this is all because, of course, we do have the 2024 presidential election this year for the US, and of course that is very important for markets, as both presidents present very different images on the economy, really, and also both presidents kind of have a very different effect on markets, just in the way that they speak, and the volatility that comes with them. We know that Trump kind of brought with him, that very volatile nature, which came with, his tweets and that kind of thing, which did mess with markets, made that a very important thing to keep your eyes on when you were trading, because that would obviously affect, people's views on US equities and that kind of thing. And then, with Biden, the more lax, more less, kind of volatile nature did allow for kind of calmer markets in some ways. But we know with Donald Trump, he eased those tax rules during, his presidency, and so that's likely to have an effect on, markets, as well as, his laxer view on, stamping out, monopolization and that kind of thing. All of this weighs on the way that traders do view both presidents, and that's why it's so important to kind of keep your eyes on and make sure you understand what's going on. Now, the US Supreme Court has now ruled that Trump will remain on the primary ballot in Colorado. This comes in a unanimous ruling on Monday, which overturned the decision by Colorado's highest court, who had initially judged that Trump could not appear on the primary ballot due to his efforts in overturning the 2020 election results. And this is not the first time we've spoken about this Colorado ballot, as this was kind of a big issue that was facing Trump, and was one that was, which the media was kind of representing as a large issue for Trump, and was kind of enabling certain challengers like Ron DeSantis when he was in the primary ballots, and Nikki Haley now, to kind of gain some momentum in the sense of we're not representing a party of criminal charges. We're not going to have that issue, and we do know that certain voters that are going to be voting for Trump, if we do start to see these criminal charges, other than the ones other than this Colorado court ruling, those criminal charges will definitely weigh on the way that voters do perceive Trump, and that is kind of a big thing as well. Now, this news also comes at a crucial time for Trump, just a day before Super Tuesday, when Colorado and 14 other states will hold their Republican presidential primaries. Trump is currently the clear frontrunner, making this year's election likely Trump v. Biden. Trump responded to the ruling on social media, saying it was a big win for America. Trump has framed this battle in the courts for the primary ballot as another battle between him and the establishment. This case was the first time that the Supreme Court had addressed the legal principle of the 14th Amendment, which originally aimed at preventing Confederates from taking office. The Colorado case was initially brought about by a group of voters who argued that Trump had engaged in insurrection on the January 6th Capitol Hill storming. So very important to keep your eyes on all things political, and all things kind of this year's presidential election related is super important, and I think very much undervalued by most. So keep your eyes on all of this. Next to talk about though is the charts, of course, where we do have quite a bit to talk about, and we are starting, of course, on US indices, and more specifically the US 30, which is looking very interesting, but actually is in a position where we're not seeing much momentum really. Price is kind of stagnating out. Obviously we still are at these all-time highs, so US equity views are very bullish still, but I think with certain views coming out and certain data being released, we are starting to see certain investors kind of loosen out on their bullish views for US equities and kind of rein those views in. And that's why we are now seeing the US 30 kind of stagnate a bit. That said, we always do really see US equities or the dollar or gold kind of stagnate and range and wait around, not moving price wise until we do receive a very big piece of data, if that's what's going to happen in that week. And that's definitely this case, and that's definitely the case for this week, because we do have that US NFP figure coming out this week, which obviously will definitely weigh on markets greatly. We do see a great deal of volatility coming out around that time, and that figure will definitely influence those investors in how they kind of perceive the Fed's monetary policy, and how the Fed is going to shape that monetary policy. So the key thing is though whether price does react to this trend line, as well as that we do have, of course, this liquidity zone just underlining that right now. So definitely look out for those two areas as two areas where price could react to. And interestingly though, recently when price did retrace, we did see it react to that liquidity zone and 50% Fibonacci retracement level. So understand that and keep that on your mind. Next to talk about is the dollar, where there's not much to talk about really. Of course, we do have that NFP figure this week, which is largely why I think we're seeing a bit of this stagnation. But nonetheless, it's stagnation and lack of volatility and lack of momentum, which kind of does reduce opportunities for trades. Now that said, price is kind of hanging around some key liquidity zones, so there is always that chance that price does react to it if there's the right kind of fundamental news coming out, which is why you need to keep your eyes on those articles to see if anything's kind of weighing on the dollar or going to push the dollar one way or another, in live action basically. And should the price and should the dollar move to the upside, we've definitely got that all-time high target of 104. So definitely on the mark. 104.9, sorry, definitely on the mark. So keep your eyes on that. But that's all to talk about on the dollar. Next to talk about is Euro USD, which is currently at that liquidity level that we've noted a few times now, and it's kind of reacted to a few times recently. So of course, we did kind of mark it out originally not too long ago when price was more so around these areas, I believe at the start of February, but we kind of marked it out because it represented kind of what was likely to be maybe the highs of this range that we were seeing form on Euro USD, as it did mark kind of the bottom of this move to the downside that we did see recently on Euro USD before we continued to the downside basically. So it was an area of lots of distribution, lots of accumulation, lots of liquidity therefore, and we have seen price now continually react to that level. But ultimately I think just because of the lack of kind of momentum in dollar and euro, we're not seeing moves one way or another in reaction to actually reaching it. We are selling off from it, but we're returning to it once again. So we are just waiting for those key piece of fundamental data basically for price to move. Next talk about though is pound yen, which is now on the upswing and is in a very interesting position, nearing those highs made on Monday the 26th of February. And that's when we did see that head and shoulders pattern form, and then we did see price sell off before price then interacted with that 61.80 and key liquidity zone. So definitely some interesting price action which is going on pound yen at the moment, and price is really respecting those liquidity zones and Fibonacci retracement levels. So we've definitely got that minus 27.2% Fibonacci extension level on the target zone. Or at least definitely it's open to moving to that level, as when price did come down to this liquidity zone, it was interacting with the Fibonacci retracement level as well, and then did reach the Fibonacci extension level of minus 27.2. So key moves on pound yen taking place at the moment, which you need to keep your eyes on. Bitcoin though is extremely volatile and extremely interesting at the moment. Since the start of February, we've seen price skyrocket from 42,000 to nearly $70,000 a Bitcoin. It's just absurd. And price is just continuing to the upside. It's just an overwhelming amount of bullish momentum that we're seeing at the moment on Bitcoin. And it's hard to see where it's going to stop. That said, price is currently interacting with its minus 27.2% Fibonacci extension level, which of course price could then sell off from, and certain orders be distributed at. And if we were just to look at the RSI, we are forming a very clear RSI bearish divergence, so maybe take that into account. But with the way that price has been moving recently, it's hard to kind of say that any of this matters, just because it seems like it's been ignoring all of those principles that we might kind of usually adhere to and listen to. That's what we'll talk about on Bitcoin though. Keep your eyes on it nonetheless. Just a crazy time for Bitcoin really. Next talk about is gold, which is in a very interesting position after pushing further to the upside. I think, am I on the right? Sorry. So on Bitcoin, we are in a very interesting position where price is just continuing this push to the upside. As we did enter the new week, we were talking about how on Friday we just saw this overwhelming push to the upside and a great deal of bullish momentum, and we were kind of saying, price is now interacting with this key liquidity zone. Will it sell off from there? Has this just been kind of a fake out, a crazy spike of volatility? But price is just continuing to the upside, and it does seem like the issues that we are seeing within China and the Chinese economy and with Chinese investments is causing just an overwhelming amount of bullish momentum for gold, and a great deal of people buying up gold basically due to wanting to put their money elsewhere. So definitely keep your eyes on gold as it does near its all-time highs made not too long ago really at the 2150 level. So definitely keep your eyes on gold. Very interesting indeed to look at. And on the daily, that just looks so bullish. It's crazy. That's all to talk about on gold, though. Next to talk about, of course, is oil, where we are kind of seeing this kind of short-term retracement now after we did hear the news yesterday around Saudi Arabia and Russia and other OPEC plus nations extending their production cuts, which did cause oil to rise to the upside. And now we're kind of seeing that short-term retracement and prices currently interacting with that liquidity zone. So keep your eyes on oil. Very interesting indeed, as price does currently interact with that 38.20 and liquidity zone. So that's all to talk about on the charts, though. Lastly to talk about, of course, is the economic calendar, where we are getting a lot of data today, so listen out for all of this. Firstly, we'll be getting British retail sales data, followed by the US and Chinese business and services figures, as well as the Bank of Japan having their governor do a speech. As well as that, we're getting the French industrial production figure, as well as the Eurozone, British, German, French, Italian and Spanish services figures. So lots of services figures which are very important to listen out for. Followed by that, we'll get the Italian GDP growth rate, followed by 2 Fed officials doing their speeches, of course. So lots of data that's coming out today to listen out for. We've covered lots on the articles, lots on the charts and lots on the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later.